Hey everybody, today is Wednesday, the 9th of November, 2022, and the markets got hit pretty hard here today. That weakness in Bitcoin just is a little bit too much for this market to deal with, and we are back down for the week. Semiconductors still up for the week, as are the biotechs and the Dow, but clearly we're seeing some profit taking in oil this week, and the Russell 2000 as well, which had been previous winners. The Bitcoin this week is down 23%. So let's take a look at this market. Clearly, there's a better way to the approach than buy and hold when the market starts to do this. Now, I'm not here to convince anybody that everyone should be a trader and that's it. There's a place for an investing approach, but my approach is trading. That's what I focus on. I know who I am in the market. I'm a trader, so I focus on the trends, and the trends for this year continue to be the path of least resistance is lower. The S&P 500 had a little bit of trouble here this week with the anchored VWAP from the COVID low. We've seen that the Tesla is finally down to and through that anchored VWAP as well. Where it goes from here, I mean, the next anchored VWAP is from this breakout. I I don't think it's unreasonable to think that Tesla could go down to 150. I don't think it would happen right away. We've seen a pretty strong hit so far this week, and a couple days ago I tweeted about the possibility that we were going to hit this level, and it dropped 10% in a couple days to get there. It looks to me like Apple is most likely going to test its anchored VWAP from the COVID low down near about 137 as well. There's just a lot of danger in this market, and when the path of least resistance is lower, you've either got to move to the sidelines and cash, or embrace the downside, or just stick your head in the sand and ignore it all. We're back below the anchored VWAP from the CPI low, that is the 2022 low in the S&P 500. The 5-day moving average continues to decline. I was thinking that we had the possibility of it starting to advance because we're getting rid of this data right here at the end of the day. Now tomorrow morning we get rid of this data, and that will turn that 5-day moving average slightly higher. But it doesn't mean all's clear to buy. Not when we're still having problems with the anchor VWAP from the recent low. We're below a declining 20 and 50-day moving average, and the market just remains a mess. The Nasdaq still having trouble with the prior low from this summer. It was unable to close above there. Here you can see that the 20-day moving average is that blue line. That is met with the anchored VWAP from the year-to-date low, and that area is acting as resistance. So as long as we're below this level in here, I don't think you can trust any upside attempts in this market. The anchored VWAP from the 2022 low is well above the market in the Nasdaq here, and that says just simply leave this market alone. If you're on the long side, it just does not pay to try to fight these trends. By the way, I am running a sale for Alpha Trends. I don't mention it often. Here is the deal basically. For $799, what you get is an annual premium membership. That alone is worth $999. There's 3 daily videos, one at the end of each day, similar to this one, which is about 4 minutes, 5 minutes long. After that, there is another video which goes over trade ideas for the next day, swing trade ideas, that is. And then midday, there's another video which is a quick update of the market itself and the open stock positions. We've got live webinars every other Monday. There's 2 courses. One is a 3.5-hour course, Intro to Trading. That's a $99 value. There's a 13-hour course, which is a $499 value. And then a 30-minute one-on-one with me if you sign up. You'll be able to auto renew at that same price of $7.99 each year. So please go to alphatrends.net to find the details for that. Again, it'll only be through Sunday. I'm not running a month-long sale. I'm not doing a obnoxious, nonstop promotion. I will probably mention it in Friday's video as well, but I'm not here to sell things that people don't want. If you have an interest in Alpha Trends in this approach, I would encourage you to take a look at it because it's a really good deal. The Russell 2000 is still trapped below the anchored VWAP from the COVID low. We've got a declining 30 30 and 40-week moving average, 20 trying to flatten out, but it's in a downtrend. And we've made the case that maybe it can turn higher, but this market also is just kind of really stuck in this bigger range for the most part. And it's a mess here. There's no sense in really trying to trade this market. That's been my theme for the Russell 2000 recently. And now that we're back below that anchored VWAP, perhaps we see something like this. Maybe we see a slight undercut of this low that grabs some stops, gets some short sucked in, rally up, and then the short sale, the better place to sell short would be right here with a stop above this level or whatever this high might end up being. But you don't want to sell short after it's just dropped from 183 to 173. Wait for a little relief rally. Sell the weakness after the bounce. You don't buy dips and you don't sell the rips. You wait for weakness after the rip to sell short. Semiconductors have run up to the anchored VWAP from the summer high, and they're having some trouble in there. We have a declining 50-day moving average. It seems likely that we'll come down and test the conjunction of the 20-day moving average and the AVWAP from the year-to-date low. On the 15-minute time frame, we're still above the 5-day moving average, and it is rising. But again, is it something to be trusted on the upside? Not when you look at the bigger picture. And where have we come from? We've just come from 167 to 200. So, we've basically run 33 points. That's close to 20% in, 15, 20% in this market. And, now breaking out above these levels is not the time to be a buyer. It's time to be defensive, raise your stops. Don't chase strength. Wait for a better opportunity. It's been the whole theme this year. The biotechs still look like they have the potential to form an inverted head and shoulders pattern. And, you could look at it and say that is an inverted head and shoulders pattern. And that's wonderful. The point is, though, it's not actionable. Not while we still have a declining 200-day moving average, not while we're now breaking below the 5-day moving average. To me, it's just a range-bound market. It's not ready to turn higher from anything that I can see here on the longer term time frame. It's more along the lines of, as I've been saying with all of these markets, if they don't scare you out, they'll typically wear you out. And I think the biotechs are in the wear you out process where it's more likely to do something like this. The energy names finally succumbing to a little bit of weakness here. It's not a surprise when markets break out from an extended level, chasing breakouts. People complain, hey, the breakout didn't work. Well, of course it didn't work. It just rallied from 68 up to 92 in the, close to 40% in the last 6 weeks, and you expect a breakout to work? Give me a break. That's the type of thing that is chasing, and that's the type of thing that gets you in trouble. We're seeing some pullback in the action. Maybe we get down to that green anchored VWAP from the day that the Fed, had their announcement. I'm sorry, the CPI, last CPI, and we have CPI again tomorrow. Maybe we're headed down towards this level. The point is, we're now below a declining 5-day moving average in energy. Don't buy the dip. The next rally is likely to look something like this. Wait for strength after the dip. You're not going to get involved at the low, but you're going to get involved when you have the wind at your back and it makes more sense. So please visit alphatrends.net if you are interested in this subscription special, and thank you for tuning in.